The way you set up the chessboard with
Right.
Jerome Powell, Janet Yellen, the ECB,
Right.
the UK, and now I've seen in your recent, you're throwing the Japanese central bank in there, the Bank of Japan in there.
Yep.
And it's like, man, this is such a unique voice in a world of global macro analysts that just keep repeating the same stuff. And so for whatever reason, you've got this ability to sort of read the tea leaves, bring in geopolitics, bring in global macro, bring in Bitcoin, gold, currencies, and paint a picture that I've never seen before. And so I know this is a massive first question, but can you set up the chessboard for our viewers, for somebody who's maybe hearing this for the first time, how we got here?
Okay, well, this will be the easiest interview you ever do because it'll take me like 45 minutes. I'll just filibuster it and the thing will be over, right? Okay, so like let's start with the beginning. Really, I'm a doctrinaire Austrian, right? So I hate central banks. I want to end the Fed like everybody else, like in that corner of the universe. And up until around, but also like everything else, like I read everybody and I read critics and and I've been around this game for a long, long time before I did it professionally. Right? I was, like so many people out there, so many people who are now my patrons that literally just like scream at their wives or their coworkers or whatever. And in my case, it was, sitting in a laboratory, running experiments and listening to podcasts back in like 2005, 2006. And reading everything imaginable and getting the lay of the land. And this is a way of me saying at some point I had to listen to alternative voices who were not necessarily, that doctrinaire Austro-libertarian critique of central planning, and marry that with real practical analysis by guys like Jim Sinclair and Martin Armstrong and others who are in the pits on a regular basis, trading these markets and seeing how the world actually operates, as opposed to the way we think we would like it to operate. Right? It's a huge discount. So for me, when there was no stakes on the table, when it was just me and my my little trading account, well, that's fine. I lost money a lot. But then once I became a professional, I went to work for Newsmax in 2013, and things weren't working well. Right, being a gold bug just didn't work in the middle of a gold bear market, and I'm like, what's going on here? And so eventually, over time, you put your arrogance aside, you do the hard work, and you constantly just ask questions, and eventually you come to the conclusion that no, the Martin Armstrong's right. The core economy never goes through hyperinflation, and we're the core economy of the world, so the dollar was not going to hyperinflate. Now the euro, on the other hand, or some of the other currencies, that's a different story. So it was not hard for me in 2021, coming out of COVID, when I started looking at the situation at hand, knowing there was going to be the inflation was coming, it was here. But then when Powell went to the FOMC and at a supposedly nothing burger FOMC meeting in June of 2021. No, they didn't do anything. You read the Zero Hedge title of the post, and it's nothing burger. The Fed doesn't do anything, except they changed this one little thing, this one little teeny thing, and they raised that by 5 basis points, which is the reverse repo payout rate, raising it 5 basis points above the Fed funds rate. And then I look, and there's the euro crashing, and there's all sorts of weird things happening, and I'm like, but I don't understand. And so then you just keep going back through everything you've read and everything you've heard, and it all just kind of like falls into place. And you go, oh, what if Powell was not a globalist like the rest of these people? You just ask that simple question, because if he was, he would never drain dollar liquidity, right? So I'm at this point in my life, I'm not a bond expert, I'm still not a euro dollar quote unquote expert, but I understand it. I've been following Jeff Snyder's work over it a lot when he was working for Alhambra Partners for years, actually. I read Jeff all the time, and since he talks in such inside baseball, who the hell can understand actually a word that he says?
Yeah.
That's a and that's just a general criticism of so many people who aren't particularly good at communicating. And I'm not, look, I'm and don't, I get elliptical. I'm not going to argue, right? But I understood the basic premise, which is that the Fed was never really in control of its own monetary policy. That was the big TLDR on all of Jeff's work over the years. But what if Powell's not a globalist and the Fed wants to regain control over its monetary policy? We know that SOFR is happening. I start working on this idea. I start throwing it out there. I get a couple of texts from various financially connected patrons, and they start throwing some ideas in my head. And they're, oh, by the way, what about this? What about this? What about that? We all kind of sat around one day, and I remember just sitting around and listening to it going, oh, the change from LIBOR to SOFR here in the United States. So change from the global benchmark for the price of international dollars went from LIBOR to the secured overnight financing rate, which was implemented by Powell starting under the Trump administration, starting in 2017. And it was a 5-year rollout. So here we are near the end of that rollout period where SOFR was going to become the law of the land starting in January of 2022, where no new debt contracts in the United States would be issued relative to LIBOR. So your credit cards, your credit revolver, your mortgage, your car payment, none of those things. They were all had to be indexed to SOFR and no longer LIBOR, which then meant that no longer was City of London setting the cost of dollars. The U.S. repo markets were setting control of the price of dollars. Well, that to me is a fundamental, like massive shift in the global financial system at the plumbing level, at the incentive level. So that starts to line up. I've always had this theory of Davos. I'm the guy who literally coined the phrase back in 2017. I started calling them the Davos crowd. Like all these oligarchs that convene at Davos and then think they run the world and do all this stuff. So I'm like, oh, I think I get it. Now, I spent about a year sitting there going, if I'm right, then X, Y, and Z is going to happen. If I'm right about that, and then all these things start to occur that are clearly point to a fight between the Federal Reserve and the rest of the world. Nobody wants Powell to get off the zero bound. There's an insider trading scandal at the Fed in the fall of 2021. Biden is holding his confirmation over his head, and nobody can figure out why. Powell hasn't raised rates. He said inflation's transitory, yada, yada, yada. He hasn't done anything. But those 5 basis points are sitting in the background, and what happened? The reverse repo facility, the balance on it went from about $450 billion in June to by Jackson Hole in late August to over $2 trillion and hit a high of like $2.6 trillion just before the Fed started raising interest rates. So he drained $2 trillion worth of what I would call global M0 from the world. Didn't drain it from the U.S. capital markets. He drained it from the offshore dollar markets because they were the ones screaming. Then you go back to the repo crisis of 2019, which precipitated COVID. Because I firmly believe that COVID was an operation to force the U.S. Treasury market bid list to force the Fed back to the zero bound. And what happened then? I remember Zero Hedge screaming about this, going, why is Jamie Dimon trying to cause a crisis in the repo market? By doing what? Not refusing to take European debt as collateral for U.S. dollar repo transactions.
I remember that.
Okay. It was just Jamie Dimon at JP Morgan to start out with. And then by 2022, it was everyone. And so you put all these things together and you have a picture. And that picture is the U.S. financial system looks at the coming techno-communism of the World Economic Forum and Klaus Schwab and you will eat the bugs and all the rest of it and says, you know what? There's no room for commercial banking in this world. If their goal is to go to central bank digital currencies, where the central banks do away with the 2-tiered monetary system of the central banks print the money, give it to the commercial banks lend it into the private markets, and it's a 2-tiered system, right? There's 2 tracks. They just want to collapse it into one. Well, where do the commercial banks fit into that model? Well, they don't. And you're going to tell me that Jamie Dimon, John Solomon, and all these guys over on Wall Street, all these big guys who smoke far more expensive cigars than I do and drink far more expensive whiskey than I do. You think they're going to go along with that because a bunch of freaking, like a bunch of, banana hammock wearing Germans are saying, no, this is what you shall do? Are you out of your minds? I mean, literally when I stop to think of it in those terms, I'm like, that was the dumbest thing I think I've ever heard in my entire life. And I've listened to Alexandria Ocasio-Cortez speak. Like, I mean, seriously, I watched the first act of Young Einstein. It was really bad. Like, I've watched a lot of bad, stupid things in my life. And that had to take the cake. So at a certain level, you just say to yourself, who does the Fed work for? The New York banks. Who's cut out of this equation? The New York banks. Yeah, 5 basis points. We get the liquidity. We start draining the liquidity. Powell survives the insider trading scandal. Eventually, the FOMC forces Biden's hand to put a reconfirmation vote on the table for Powell. He passes with 80 votes. He gets a second term. That happens in late February of 2022. And at the March meeting, he starts raising rates. And by July, he's got Christine Lagarde in such a panic, she has to announce the toilet paper, the transmission protection instrument, which is basically, QE to maintain bond spreads. Mm-hmm. Meanwhile, we've got Janet Yellen over at Treasury doing everything imaginable to reinstitute QE because she loves doing it so much in yield curve control. She loved doing it so much when she was when she was the Fed chair. Mm-hmm. So that's the background of this. I'm not in any way, manner, shape, or form casting the Fed here as the good guy.
Right.
Okay. That's not what I'm doing. I happen to want to believe at a certain level that Jerome Powell is somewhat of a patriot, being, 8th generation Virginian. Right. But even if you're not willing to go there, at the end of the day, the power of the United States has been the power of its banking system and the independence of its banking system. The commercial banking, the free banking of the United States is what built the United States in the 19th century. And I got news for you, and it's been something that the British have targeted to destroy since the day after Cornwallis surrendered at Yorktown. Okay? And when you understand it from that perspective, when you understand that City of London has, in effect, ruled the world since the formation of the Bank of England in 1694, when you understand it that way, and it doesn't matter what other things that have been grafted on and other groups that have been grafted onto this. At times they fight with the French, at other times they invoke the Italians. Sometimes they grab the Rothschilds, and something. It doesn't matter. At a certain level, this has been going on since the 17th century. Okay. And the United States had a free banking system that literally challenged the old industrial might of Europe. By the beginning of the 20th century, it was unstoppable. One could argue that Lincoln saving the Republic did so in order to stop stop France and Britain from effectively color revolutioning the United States. Even though my heart's with the South on this, like morally, and as a libertarian, as morally, the South was correct, right? States' rights, self-determination. Mm-hmm. Eventually, slavery was going to go away anyway. But that was an issue used to reinforce the tariff structure and the trade imbalance between old continental Europe, where the industrial might was, and the U.S. And the South was their supplier. The North was the upstart industrial center, and they needed to be killed in their crib. Mm-hmm. And the way you do that is by lashing the South to them and forcing the South and the North into conflict. And so all of this stuff's been going on for a long, long time. And don't kid yourself, folks. If you think that I understood half of what I just said back in 2021 when I saw the June FOMC meeting, you're crazy. Of course I didn't. Over time, it's now 3 years. You sit there and you continue to improve your your arguments. You continue to like dig into the history and look at things a little different, and recast things, and you go, oh wow, that makes so much more sense than the way I used to look at it. And so the reality is that we're now at the end of this rate hike cycle for the Federal Reserve. But did anybody think we would ever get the 5.5% and hold it there?
No one. You were the only voice I heard.
So literally. And I was just literally running the Austrian playbook. If I were the Fed chair under these circumstances, what would I do?
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest ByteFederal ATM and turn your cash to coin. ByteFederal has over 1,200 locations around the country with the highest daily limits. Go to our website, ByteFederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.